Welcome to Travisa Financial. Travisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Travisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Travisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Travisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Travisa Financial, no one serves first-time homebuyers better.
Hello, everybody, and welcome to our EEP Masters class. I wanted to welcome you, appreciate that you guys are here today. We haven't had any webinars for a little bit, so we're definitely happy to be back. And today I have a really special guest I want to introduce is Héctor Amendola. He is our president. And so I'm going to hand this off to him.
Awesome. Thank you. Thank you, Monique. Thanks, everyone, for joining again. We do these sessions pretty regularly. Like Monique said, it's been a bit since we've done them, but we try to stay on top of making sure that we have these classes regularly. We have our EEP Power Up series where we do twice a week. We have our Monday scenario, our Thursday deal desk. We have our EEP hotline also, which is available to everybody. And really our goal is to provide everybody with the resources to be successful with our EEP product. And that's something that we knew early on. Because of the nuances with this product, we're going to have all hands on deck with making people feel really comfortable with the product and know that it's different. But as you'll hear here shortly, different doesn't make it a bad thing, and sometimes it actually makes it a good thing, because what you'll see and what you'll hear from some of our speakers today is going to be that this can change the game for a lot of loan officers if it's done right, and if there's a real focus on it. So focusing on that and talking about that, I want to introduce our speaker today, who is the National Sales Manager for Altera Home Loans, Janelle Rodriguez. Janelle and I have a long history of working together and working with one another, and so we've grown together in this industry really over the last 10 plus years. And sorry, and so I'm really excited to have her on, because right now Janelle manages a team of loan officers that has been really, really successful with the product. And so just Janelle, let's go ahead and jump in. You manage a team of loan officers across the country. And one of the reasons I wanted to talk to you is because we've seen some of these loan officers really transform their business through using this product. And so maybe I thought we'd start there and kind of get everybody excited a little bit with sharing some examples of regions where LOs are closing, a lot of EEP.
Yes. Thank you, Hector. Is it me or is my camera looking kind of funny?
It's a little funny, but Janelle is very beautiful, and if you guys can see the true picture, you guys would see it.
I don't
Something's
know.
going on with their camera now, but I think
Yeah.
it works, and I think we'll be okay.
I don't know what's going on with the camera, but hopefully it's not too distracting, and hopefully my laptop figures it out. But yes, this program has not only been life-changing for the families that we get to help with this program, but it's truly been life-changing for our loan officers. I have loan officers who just started with us at the beginning of April, and by June, they had 30 live contracts, not pre-approvals, 30 live contracts in their pipeline, all for this program. This same loan officer that I'm talking to you guys about, in July, she closed 13 loans. All 13 were EEP. And her business has just been booming since then. Again, 95% of her business is EEP.
That's crazy. So I'm not a big proponent of only having one product in your lineup, right? I think you need to have diversity. I think it's clear you have to have it. But we do have, and we have seen some loan officers that, maybe even exclusively are only closing this product. And some of the things we hear from them is, if I have people calling me all day because of this product, then why go prospect for something else? Which, could make sense for you. And again, everybody's different in how they approach their business and their business plan. And so, Janelle, diving into the product a little bit, first, and don't worry about needing to explain the nuances of the product. After we're done speaking, Monique is going to take over, and Monique is going to do a pretty thorough training of the product. But tell us, so the product itself, just to kind of give everybody, so some people on here may have not done too much research or really used this product yet. So I'll start here by saying that really what we have is a product where we have an entity and that is acquiring a home for a borrower who doesn't qualify for a regular loan for whatever reason. Maybe their income isn't there, maybe they don't have a social security and they're using an ITIN number, which is, I think, the more popular one that's being used right now. And so there's a lot of reasons why folks aren't qualifying, and so they use this product so they can obtain a home. And through that purchase, the entity purchases the home, and then they do basically a lease to the borrower, and then the borrower is gaining equity throughout the transaction. And so it is a form of home ownership through that equity, if that makes sense. And again, Monique will dive deeper into some of the training on the product itself. But that being said, it's a little bit of a different product. So tell me, when you explain the product to one of your clients in the loans that you've closed, what key points do you think usually get their attention?
Honestly, I feel like the key point is just that we're saying yes to them. I feel like most of these families come from underserved markets, and they're used to either getting no's, or the requirements are so difficult that they feel that it's unreachable. So when I'm telling them there's a way, there's a path for you to be able to acquire home ownership, that right there, like when I'm meeting with a client face to face, like the smile on their face from me telling them, yes, I can help you, I have a program that fits your needs, that right there is just, it's like a light bulb goes off for them.
So just the access to home ownership that they otherwise just don't have right now
Exactly.
is enough to get their attention. Now, when you're talking to some people, you probably hear some misconceptions about the product. What misconceptions do you normally hear? And then how do you clear those up?
So the biggest misconception is, oh, the equity doesn't belong to me. Because the entity is going on title, they feel, oh, the equity is not going to be mine. They're going to try to take the equity away from me. And that's furthest from the truth. The program name is Earned Equity Program. So it's designed for that, for them to be able to build their equity starting day one. So what I've done is I actually have a blank copy of the homeownership agreement that they sign. And for the borrowers that just they're not believing it, or they just, it's like, no, this is too good to be true. How does this even work? I do show them a copy of that so that they can read through it and so that they can feel comfortable. Okay, the equity does belong to me.
So the home ownership agreement itself, which is something that they sign before you close the transaction, details for them that the equity is going to belong to them, and it's going to be signed, and it's going to be, you know, part of your documents that you close with.
Correct, exactly.
So and so that's, you know, there to give them peace of mind. What about, you know, on that same token, Janelle, what about a referral partner? So as a loan officer, sometimes we have realtors that are referral partners. A referral partner comes to you and says, you know, what can you do with an ITIN product, for example? And you reply to them and say, well, I actually have a 3.5% down payment ITIN product, but it's a little different. Tell me a little bit about how you go into that with a referral partner.
So I do start off with that, with telling them, look, this product is completely different than what you're used to. I do talk to them about the title piece, and then I just give them the reassurance that we are going to be recording that memorandum, which is going to protect the borrower. It's going to protect their interest and the equity to the property. So just giving them the reassurance that this is a legit program, that we've done it multiple, I mean, we've closed over thousands of these loans. So just giving them the reassurance that the borrower is protected. I think that's their main concern, is the borrower protected with this program.
And so I'm guessing that early on you started using this product, you got some objections because that's what's going to happen. It's natural. And then you evolved your pitch, if you will, or how you talk to people about it. What have you changed in that, you know, first conversation with the referral partner or with the client to say, you know, this is how this program is? How do you start that conversation?
So I start off the conversation with kind of tying in the why the program even exists. So I tell them, you know, we came out with this program because we found a need in this market. These borrowers, these families wouldn't have access to homeownership if this program did not exist. So I kind of tie in that whole why of why the program exists, tie it back into the story of the borrower, how this is going to change, you know, not just give them wealth, but build generational wealth.
Got it. Okay. So you basically lean into the benefits of it and the benefits for the borrowers and say, let's get away from the complexity a little bit, and let's focus on the fact that we're going to be able to help more people.
Exactly.
And that's going to help with the referral partner. The complexity part is always super intriguing to me. I was a loan officer for a lot of years. You and I, when we first met, we were both originating, and as a loan officer, one of the biggest things is I don't want to let my referral partner down because I'm only as good as my name. I'm only as good as my last loan. I've heard a lot over the years. And, you know, that being the case, jumping into something you don't really understand, or that maybe is a little bit more complex than you're used to, or maybe you missed something that you didn't think about or you just didn't know about, and then it becomes something that delays your transaction a little bit. Can you maybe, and you know, I didn't prepare Janelle for this. I'm throwing her. I'm probably going to stump her right now, but maybe I don't think I will because she's super smart.
No pressure.
What would you say to a loan officer who's saying, you know, I don't know about this product. I'm nervous because I don't know enough about it, and I might ruin my name, and I don't want to lose that, you know, super important referral partner. What would you say to them?
What I would say to them is, well, first of all, you guys all on the call are smart because you have partnered up with the best company to be able to offer this program. Not only were we the first lenders to do this loan, but that has allowed us to really master this program and truly understand it. So I would say to that loan officer, you're in good hands. We know what we're doing. Follow our lead. Just let us help you, walk you through this first loan to get your feet wet, and then you guys will be fine from there on.
You know, I'm gonna do another curve, and now I'm gonna throw Monique into this a little bit. Monique, I don't know if you speak right now. Can everybody hear you still? Yeah.
Can you guys hear me?
Yeah, I can hear you. Good,
Okay,
good.
perfect.
So this is interesting because Janelle just brought this up, and she's right. We've been doing this for a lot of years now. This is not new to
Yeah.
us.
Yeah.
A lot of newer people that start doing this loan are newer, and they're going to really struggle through it. And you might have heard other people say, you know, the lender I'm working with just has trouble with this loan. And in some cases, I'm going to be very frank with you guys. It might be that the lender just doesn't like the loan. Period. They don't like it. They think it's different. And people don't like different a lot of the times.
Could be.
And Janelle and Monique work together because where we snatched Monique from was really the implementer of the program at Arrive, right? And so when Janelle was closing her loans, her go-to was Monique at Arrive, and them together were closing these loans. So when Janelle says that, you know, this is a company that understands the product. Not only have we been closing it for years, not only have we closed the most and are literally closing the most loans right now of this product, we also have the secret weapon of Monique, who, you know, was every loan officer's secret weapon, and now she's your secret weapon as far as understanding this product. And so I mentioned earlier that we have a Power Up series, and Monique does scenario questions twice a week. And so I encourage everybody to join, and then we do regular reminders of those. But we also have our EEP hotline, which is, you know, an ability to just dial directly to Monique and say, I'm stuck. What do I do? I don't know how to answer this question. How do I answer it? And I'll go a step further and say, we're okay with, you know, you bringing the client onto the call and having Monique help with that, or you bringing the referral partner onto the call and having Monique help with that, just because we do feel like the confidence that we have in the product is going to be felt throughout that phone call. And you're going to walk away going, okay, that person feels a lot more comfortable because, an example, the referral partner, you might not want your client to call us directly, but that's fine. But if you had the referral partner call and say, look, I'm stuck on this. I don't know how this works. My client's asking this question. I'm not getting a direct answer. We're happy to answer all of those questions because, again, we're very confident in the product. So that was my quick commercial break because Janelle kind of led me there with her answer there. So education for the product, Janelle, what role does education play with both clients and with referral partners on closing one of these loans?
I think education is actually key. It's very instrumental in being able to close these successfully, because the more the borrower and the realtor understand the program, the easier it is for them to believe in it and to actually, you know, want to move forward with it. So education, truly understanding yourself, the way the program works and all of the benefits, so that then you can go and educate your realtors or your borrowers with that.
Yeah, they say if you can't explain it, then you don't understand it, right? And so make sure you can explain it and ask all the questions you need to be able to explain it, and then you'll feel like the expert in the room whenever you're talking about it. And as a loan officer, you have to be the expert in the room on the loan, right? There's no two ways about it. That's something that you need. So Janelle, you work with a lot of loan officers, and you mentioned the person that came on board not too long ago and closed 13 in 1 month already. I'm sure you face a lot of people that want to use the product. They hear about the success other people are having with the product, but for one reason or another, they're afraid to really jump in. What's the biggest hurdle you see loan officers facing when trying to close EEP loans, and how do they overcome?
I honestly, for us, the biggest hurdle has been not reaching out to the agents, and mostly the listing agent. So I've noticed, obviously there's an assignment addendum that needs to go in with a contract that is going to transfer over the buyer from your buyer over into the entity. A lot of the loan officers don't take the time to actually call the listing agents and explain the program and, hey, this is the reason why we're doing this. This is why your seller needs to sign this assignment addendum. So just adding that piece and reaching out to your listing agents to explain that part, I've noticed a huge, not just in accepting the offers, but then when you're talking to these listing agents, you can take that opportunity to explain the benefits of the program. And 9 out of 10 times that listing agent's going to say, hey, I think I have a client that would benefit from using this program. And I have gotten so many listing agents to send me business for this program because I've picked up the phone and called them to explain how this loan works.
You're expanding your network even more by telling everybody, look at this cool product that I have. What was the name of the addendum you mentioned right now, Janelle?
It's the assignment addendum.
And the assignment addendum does what? Since you brought it up, and I'm sure everybody's kind of scratching their head going, what's an assignment addendum? What does that do?
It transfers the buyer's name from your original buyer over into Tool River to the entity.
Okay, because our buyer isn't directly buying the property, the entity is, even though they have rights to the equity, and it's an earned equity program, and all that again is going to be explained by Monique. There has to be an addendum signed that says you looked at the property, you made an offer on the property. Now that it's been accepted, we're going to transfer this over to Tule River. Tule River is going to be the actual buyer of the property, et cetera, et cetera. So again, Monique will go into all of those nuances with the product. Can you share a story of a tough deal that came together because of
Yes.
EEP?
Yes. So I actually had a borrower who reached out to me. She found me online and she told me that the reason she called me was because of my bio. And she had already been turned down by 5 other lenders. She had a social US citizen, but she was self-employed. And she had, if I remember correctly, it was like a 608 FICO. She didn't have the down payment that was needed to go on a regular bank statement loan and or the FICO. So I told her about this program. I said, look, I have this option. It is different. You will not be holding title in a traditional manner. I explained the whole program to her and then all of the benefits. And she said, let's do it. And then at the end of the transaction, she was like, see, I knew it. I knew that you were going to be the one that was going to find a way to help me. So that was.
It's a great story. So standard products like bank statement products require 12-month bank statements. And you're saying because this product allows you to do it with 3 months bank statements, we might be able to get this deal through this way. And then, is that right?
Well, no, it was a lower FICO score and she didn't have the funds needed for the down payment. So,
okay.
Yeah.
Okay. So the bank statements worked. It wasn't a bank statement thing. It was more the other the guideline issues that she was having with a traditional product like that, because a 12-month bank statement will require more down payment normally than the 3.5% down payment. That's a cool story. What do you think the mindset of a loan officer needs to be to stay consistent and confident with a product like this?
I think the mindset is, so I always approach things especially with this program, I'm not selling a program. I'm providing a solution to these families' needs. If I didn't have this access to this program, then I wouldn't be able to help all of the families that we've been able to help obtain home ownership, which in turn then builds their wealth, and the generational wealth comes with it as well. So it's just approaching it from, you're not selling a program, you're providing a solution for these families.
Very cool. We have quite a few people on this call right now, that are here because they want to learn, because they're trying to figure out how to put more loans in my pipeline. What advice do you have for a loan officer who wants to close more EEP?
The advice that I would give is truly believe in the program. You really have to own the program, understand it, because the more you understand it, the better the easier it's going to be to explain it to the families that you're helping, to the realtors that you're getting business from. And if you don't truly believe in the program, it's going to come across when you're explaining the program to these referral partners or to your borrowers.
So confidence is a big key here, right? And this is just standard sales 101. If you're selling a product and you don't have confidence in the product you're selling, they're going to be able to tell, and they're going to not want to buy. It is that simple, right? But we've again, Janelle has closed over 100 of these transactions. We had loan officers that have closed, over 100 of these transactions. We've, closed a ton of them. And so the reality is that it works. The reality is that we have a bunch of people in our database that are living this right now and earning equity through every payment that they make, and that it's giving them options for later on. And so we're having a lot of success with it. Any last things you want to share, Janelle, with anybody?
Just again, hone in on that. You guys couldn't have partnered up with a better company because we truly understand this program.
And whoever messed up Janelle's camera, I want to thank them, because she would have she's so beautiful, she would have completely outshined me and nobody would be paying attention to me.
Yeah,
But because she's here, yeah. So thank you, Janelle, for your time. Again, to everyone. We wanted, when we started doing these trainings early on, I said I need to have somebody who's closing these loans and who's having success with these loans, because that's who our loan officers want to hear from. They want to hear from somebody who's having success, and potentially maybe answer some of the questions that they may have. Monique, are we able to open up so we can so we can see if we have any questions from the people on the call?
Yeah, we can do a Q&A right now. So I do have a few questions. Will this call be recorded, and can we receive a copy?
Absolutely.
So yes, actually what we do is after every webinar that I host, we get it sent out to you later on that day. We put it together in an email, and you'll receive a summary along with the copy of the video. So you'll definitely get that. Another question is, how do you get over the hump of selling the higher rate on the program?
So for me, the interest rate isn't even a hurdle for us because most of these families have been told no. And really the rate is not that much higher if you compare it to your non-QM products. So that hasn't really ever been a challenge for us. Again, they're just happy to be able to even have a shot at buying a home.
Yeah, for most of these borrowers, it's not a matter of they have, all these options to go to, and they can go to the lender down the street or the broker down the street and get a different quote, because most likely they're going to be told no by that other loan officer down the street. So rate stops being so much of an issue because it's a matter of, let's get you into this house.
Yep, exactly. Another question is there an expense rate percentage for this program? So I'm going to assume that it's for self-employed, and there is an expense ratio factor. The standard is 45%. We do have a tiered option, in which I'll get into further down the webinar and explain that a little bit more in detail.
Awesome. Keep going, Monique.
Hello, great job. I would love to get the guidelines. Can this work for ITIN? This is perfect for ITIN. Perfect for ITIN. And then
real quick, just to be clear, Pamela, the majority of the loans that we're doing on this product are ITIN. It's almost exclusively ITIN, to be honest. We do, again, Janelle said it, some folks don't fit into another program, and we'll fit them in there as well. But the more popular version has been through the ITIN product.
Yep. Does the buyer have to have taxes filed just like standard FHA guidelines? So if you're using bank statements, that's going to be a no. If you're an ITIN W-2 and your ITIN matches your pay stubs and your W-2, that's a no. The only time that the underwriter may ask for tax returns is if they're using a social security number on their pay stubs or W-2. They may ask for those tax returns just to verify that they are using that ITIN to file.
Let me help here a little bit, Monique, because the questions are coming in fast and
Oh,
furious, and I want you to have enough time for the
okay.
actual, because a lot of these questions might be answered by. So I'm gonna skim through this real quick and see which ones are directed more at Janelle,
Okay.
and then we can move forward. So, any advice on how to make the seller comfortable with paperwork with the lender not being the home buyer? I think they're saying making the seller comfortable with the addendum part of changing it from the person who made the offer to the entity. Any advice on that?
So this is where it's key for you to speak to the listing agent to sound confident about the program, because they're really the ones that are going to relay that information to the seller. So the more confident you are in the program and the better job you do at explaining it, then the easier it's going to be for that listing agent to then build that confidence with the seller that, hey, this is a legit program. We're not going to have any issues closing. It's okay to sign.
Which highlights the point that this is the perfect time for a product like this, because inventory is in a lot of markets. I know some markets are still really rough, but in a lot of markets, inventory is sitting out there a little bit longer, and so a listing agent is going to be more open to that. Whereas, and there's some markets, or there's some, really high, seller markets where people are going to go, I don't want this product, it's too different, or whatever. This is the perfect time for you to really double down on a product like this, just because there is more inventory. Continuing to go through this, how do you explain they won't be on title? So how do you explain to the borrower that they're not going to be on title?
So the way that I explain it is, yes, you will not be on title in a traditional manner, but we are going to record a memorandum, which is going to protect your interest to the equity of the property. So I just really hone in on making them feel the reassurance that they are going to be protected, that there is going to be something that is recorded to the title of the property. That's
And
going
the
to,
name of that document is what, Jenna?
it's a memorandum that gets recorded.
So we're recording a memorandum that says you have rights to this equity, and that's how we get past the fact that they're not going to be entitled. Again, it's different, right? There is some differences, so you have to be good at knowing how to explain it and reassuring them that it's still going to be a good thing. Can you combine Social Security with ITIN?
Absolutely.
Yes. Okay, how to explain they are not renting, that they are responsible for maintenance and repairs. They can't have the best of both worlds, being a renter and an owner.
Well, that's easy because you tie it back to the equity is there. So the house is theirs. They have every benefit of a homeowner. It's just the loan is done a bit differently.
So just again, diving into the nuances of it, you are going to be responsible for maintenance and repairs. Those are going to be up to you. That being said, one of the things that we do is we want to make sure that, at taking over the property, that it's in good enough shape that they're not feeling like they have to dive into completely doing work from the beginning. So that's something
Yes.
that's important too.
Yes.
Regarding the baseline requirements, does the borrower have to be employed in their current role for a minimum of 12 months? And does this home have to be their primary residence?
Yes to the primary residence. 12 months on their current role, that is not necessarily, they can have 3 jobs over the last 12 months as long as they're in a similar role or the same role. We do ask that you do document a 2-year history though. So it follows FHA a little bit, but for instance, self-employed, you only need to be self-employed for 1 year. And if you haven't been, then there's exceptions that can be made. There's definitely things that, go ahead.
I was just gonna say, this is why
Oh, yeah.
the scenario desk, the scenario Thursday, and those calls are so important. The Power Up series, because when these scenarios are coming to you, jump on those calls and ask those questions, and
Yes.
even if you don't have scenarios, jump on the calls anyway, because you might hear somebody else ask a question that maybe you, will get later on, and you just want to have more education and whatnot. So. I think what I'm hearing Monique say is just really on a case by case basis, we would have to look at it and see how it all works and kind of put it together. Last
Yeah.
question, then I'll turn it back over to Monique. Will the program work for a refinance?
No.
Example. So the answer is no. Example, a borrower wants to add to their property by buying the land bordering their property. So the answer is on the refinance is no.
no.
This is for purchases only.
Correct.
Awesome. All the other questions that were on there, I think Monique will answer with her presentation. So rather than taking up everybody's time with that, I thought it'd be easier to have her dive into the presentation. Again, Janelle, thank you so much for doing this. You're awesome and amazing, and keep doing what you're doing. And I'll turn it over back to Monique. Take over, Monique.
Thank you, Hector. So first of all, I wanted to thank our special guests. Again, Janelle is the National Sales Manager for Altera Home Loans. And are you going to stick around, Janelle, for Q&A at the end?
I'll stick around.
Okay, awesome, perfect. And then we really appreciate Hector joining us. I know that he's got a big, busy schedule and is going to head up back to the MBA conference. So again, thank you, Hector, for joining us. And then about me, so my name is Monique Minaya, and as Hector was mentioning earlier, I do come from the entity and the program. So the development of the program, I started there a year and a half to 2 years ago. I helped further develop the program. I was a production manager, so I was over processing, closing, the signers at the tribe, and title approval. I was part of the underwriting committee, and so I really, really learned this program. I love this program. It has a really special place in my heart. It helps people that otherwise have no other options. And so I'm definitely here to support you guys. Any questions? We have a lot of options for support. Beings, our team. We have Sherry Hatcher, who is our AVP of operations, TPO. She is wonderful at guiding you how to get loans registered, the process, everything regarding getting the loan submitted, conditions. And so she's very, very beneficial to our team, along with Ben Slayton. He is our head of business development, and Norma Summers, our account executive. So we're very fortunate to have such a wonderful team. And I started in 97. Shari started in the industry in 94. I know Ben's got about 60 years. Not 100% sure about Norma, but I think we have all combined over 100 years of experience for you guys. So Travisa Financial, we're here to bring our innovative loan products to you. So together we can better serve first-time homebuyers and help them be able to create the equitable wealth through homeownership. You may hear a few things that were already repeated earlier today. Our EEP product. So this program is what starts the dream of the homeownership and the generational wealth. The how, it was briefly touched on earlier. The how starts with your home buyer. Your home buyer cannot qualify for traditional financing. And so you're going to send them over to us to get pre-qualified. And then as soon as they're pre-qualified, they're going to go out and they're going to look for their home. This home that they're going to go and look for is going to be their dream home. So it's not, you know, where there's just a seller offering a option to purchase. It really gives them the opportunity to go out and look for that home that they want. So as soon as they find that home, there's 2 steps that are going to occur. So the first step is that your home buyer is going to put the home under contract. They're going to be the ones putting down the earnest money. And then as soon as that contract is accepted, there is that assignment addendum that Janelle was speaking of. It essentially will get signed by the buyer, the seller, and then that gets sent over to us and we have the tribe sign it. And that assigns the purchase contract, earnest money, everything within over to the tribe. The tribe will finish out the FHA financing through us, Travisa Financial. We're the ones that are going to underwrite, process, and fund that loan, service it as well. So as soon as that FHA loan is ready, we're going to be also underwriting your home buyer through the tribe. The tribe is just going to make sure that they meet their standards to sign the homeownership agreement. Simultaneously, while the tribe is signing on the FHA loan, the home buyer is going to go into title and sign on their homeownership agreement. As Janelle mentioned, this homeownership agreement does have the memorandum that is recorded on title. And so this gives them their security interest in the property, and is definitely a way to explain they're not on title, but we have the memorandum, so on and so forth. So the biggest players in this EEP transaction, number one, is going to be the government entity. They're the ones that are going to be the ones actually financing the home. And with the government entity, they're buying that home from the seller with an FHA loan. And in turn, the home buyer is doing the seller finance agreement that will be recorded on title. And so that gives you a little bit of an idea of how the whole big picture looks. So for the EEP, our program highlights are low down payments at only 3.5% for ITIN, including non-permanent residents, DACA, and US citizens. So this program isn't just for ITIN. We have low and no credit scores. So we allow credit scores down to 580 with only one trade line. If they do not have that one trade line reporting on a credit report, we do allow for alt trade lines. And for our no credit score program, we can, more than likely, they're not going to have that 12-month trade line on credit. So we do allow alt trade lines for that. They just are required to have 2 alt trade lines. Our 3 months bank statement program is huge. It's not only for self-employed, but wage earners and 1099s as well. We have the DTI 50/60. So that is standard. There's no adjustments depending on your borrower's credit score or anything of that nature. It's a standard DTI of 50/60. No source or seasoning of funds to close. So, some people want to save their money at home, which is perfectly fine. And we do allow gifts. BKs are okay. For a Chapter 7, they can go out and start looking for their home, put it under contract, start the process. We just need to show that it is discharged 1 day prior to closing. And all property types that FHA allows. So one thing specific, though, that I would like to point out is for condos, let's make sure that they are FHA approved prior to going under contract. So if for some reason you don't have access to the FHA connection or a way to make sure and confirm that it is approved, feel free to reach out to us, and we're more than happy to take a look for you guys. And seller contributions up to 6% of the sales price. This enables to help lower your home buyers' required funds to close. So when we're looking at qualifying the home buyer, we have some definite niches to this program. People that need to use bank statements to qualify, self-employed and they've written everything off, gig workers, receive tips, newly self-employed, W-2, low and no credit scores, with very limited trade lines, high DTIs. One thing that we have that's amazing for our verification of rent is it does have to be a 12-month history. But for instance, your home buyer doesn't have cancel checks or bank statements to show that they can back up the verification of rent that was completed by the private landlord. If this borrower has a 620 credit score or higher, or their payment shock is under 125%, or their DTI is 43 over 50 or lower, we can completely waive that additional documentation required to back up your written VOR. So we have quite a few of those niches that go along with the guidelines, and reach out, join the webinars, and ask your questions. So this is something that I had mentioned earlier with our tiered expense ratio. Again, the standard 45% expense ratio exists, but we know that at times there are certain factors that come into play for each individual situation. And so this is why we have the tiered expense ratio. If you need to help your buyer qualify and 45% is just too high. So the different business types, of course, are the service business, where you're looking at your accountants, financial planning, therapy, real estate agents. And then we have our product businesses, and these are going to be where it's restaurants, retails, manufacturing, contracting, things where products need to be purchased and the expense ratio goes higher for that all in its own. So if you can look here on the graph, we have an expense ratio at 10% if they have no employees, a 25% expense ratio with 2 to 5 employees. And this, I'm not sure what that is, so apologies for that. But of course, to be eligible for this, we just need a little bit of extra documentation to support a CPA letter, documentation online, things of that nature. So we can always talk about those and see if there's, I've had one go through with a letter of explanation, but it took a little bit more than just a standard request. All right, so qualifying the property. Again, all property types, 1 to 2 units are okay. PUDs manufactured. Also with FHA, there's no investments, there's no single family manufacturer, no 3 to 4 units or co-ops, no second homes, and this has to be a primary residence. Full FHA appraisal is required, and a home inspection is required if the appraisal comes back at a C4 or higher, and or if the property was built in 1979 or older. So keep in mind, you might have a property that went under contract, it was built in 2005, you think you're good without needing a home inspection. The appraisal comes back in and it's a C4 condition. We do need a home inspection at that point in time. So the homeownership rights, this is the great tool for selling. They have the full rights to use, improve, sell. They get those tax benefits. So at the end of the year, they're going to get a 1098 interest form to write off the interest on their taxes. They have all of the equitable rights, the appreciation. And so we really want to make sure with the homeownership agreement that we're protecting the home buyer's rights. And how we do that is the memorandum of homeownership. And so this is something that Janelle and Hector went over, is that memorandum to the homeownership agreement that will get recorded on title. So different options for taking out. When the home buyer has either decided that they want to upgrade, they want a bigger home, at that point in time, there's a few different options. They can look at selling the home, and at that point in time, they have maybe gotten all their ducks in a row, and they can do seller finance or get their own traditional financing, or they can use our program again. So definitely they can't use it multiple times. If they're going to reuse it, the home has to be sold. Another is assuming the FHA loan. So assuming the FHA loan and is one of the biggest ways that I've seen the home buyer take over. And sometimes if they are ITIN and they don't know or feel like they might be in a good point with that ITIN status in the next few years, they can add somebody to the homeownership agreement. Even if they're not on the loan, they can be added at the time of closing, and that individual can do the assumption of the loan in time. So when you're out marketing and you're looking for who is the right fit for this program, you're going to be looking at, ITIN status. You're going to be looking at self-employed borrowers, seasonal fluctuations, denied traditional finance. We just had the FHA mortgagee letter 2509 go out earlier this year that states FHA will no longer lend to the non-permanent residents. And so this is a great program for those FHA fallout borrowers as well. Your home buyers that can't show you 6 or 12 months bank statements. So 3 months bank statements, and you only have one major credit bureau. So that's definitely great selling points. And the competitive market of ITIN shows you here that Travisa Financial is extremely competitive with our 3.5% down versus 15 to 20, 3 months bank statements versus 12 to 24, and our max CTI 50 over 60. Most lenders are 34, and some of them will go a little bit higher, but then they need 2 comp factors. In addition to that, the credit scores, 700 to 720 minimum credit scores, and we have the 580 credit scores. So situation that EEP is such an amazing product and tool. If you look at the top, with only days to close the EEP program, it saved the deal, and in record time. It had many roadblocks. The title company wasn't approved. The termite and inspection came back requiring repairs and conditions. And there was a tight seller deadline. And in the end, we were able to get them closed quickly, on time. The loan funded, this seller's deadline was met. And this family that was a family of 3 that were all ITIN borrowers, first-time home buyers, were so excited they got into their dream home. They were especially excited that their dream home had full fruit trees in the back, that they threw a barbecue and invited all of us to go to it. So it's really worth that satisfaction, knowing that you really helped somebody get into their home, their dream home. We also have other programs here at Travisa. We also have FHA, VA conventional, USDA, and then we have the Advantage DPA, which is our down payment assistance program, which is forgivable. And so we have a 3 and 5% forgivable DPA program along with our earned equity program. We have the support. We have a phone number that you can call. It goes directly to me if I'm not in a meeting or available to answer it. Or we have our email. It's eepquestions@travisafinancial.com. That email box goes directly to me as well. So if you have any questions that you want to run by me, please feel free to reach out any of those ways, along with your account executive, Norma or Ben. Sherry is also always available to assist as needed. We have our resources here. We have, again, the hotline. I do my weekly training sessions. And if you ever want or need, we can set up a private training session. If you want to bring your operations team on, your processors, if you want to bring your realtors on, we're more than happy to do some private training to help you guys develop and build your EEP program. In addition to that, we have flyers available to market that we can customize to you and your company. So we're more than happy to help support you guys in any sort of way that we possibly can. So now we're going to go ahead and get started with the Q&A, and I'm so happy that Janelle stayed on to assist with answering any of these questions. Let's get her back on.
I fixed my camera.
Oh, good. I was going to say it kind of, it was kind of giving me like a Halloween vibe. Perfect month for that. Okay, I'm going to run through and see if there was any of these questions from earlier that we can get answered, and then we'll see if anybody else has any more. Sorry, guys, just skimming here real quick. So the actual loan process from submission to closing, that's Well, so that's kind of a weighted question for me, at least, because we have a lot of TBD submissions. And so we get your client approved, and then, you know, depending on how much time it takes them to find that home, usually I like to go from the date that it goes under contract to funding, which I know that the tribe has increased their service levels recently. So for me, I would say 37 to 40 days. Janelle, do you have a different site on that or view on that right now?
So we've been able to close loans as quickly as 21 days. Again, the TBD approval process is key for that because you already have your conditional approval. You already know what you need.
Yes.
On the FHA loan side, it's really just title and appraisal and contract that you're going to need. But really having that approval from Arrive is going to be key because it's going to let you know what conditions you need. So once you're under contract, if you already have all of those conditions, then things should run pretty smoothly.
Run pretty quick. And
Yeah.
that's what I feel as well. Do you feel like when you first started the program and first started you know, working the loans that it was a little bit slower until you got through your first few and, you know,
Yes.
as a loan officer with your processor?
Of course, yes. As I became more comfortable with the program, I already knew what the underwriters were going to need. So I'm submitting pretty complete files when I'm submitting a TBD approval because I already know what they need. So it does make things a lot easier as you start gaining more knowledge with the program.
Great.
More
I love to
experience.
give that confidence to everybody that, you know, the first one or two might be a little crazy and what is this? Because, you know, trying to wrap your mind around the whole, you know, you're running two files at once. As we had mentioned earlier, you're running the FHA loan through Travisa and simultaneously you're running the home buyers loan. So definitely a little bit to wrap your brain around. But I have noticed that once you get, you know, down two or three, it seems to just flow very quickly and smoothly. Um, let's see what else. We answered that one. If the client has a CPA letter stating their expense ratio is 15%, is that acceptable? So as I had mentioned before, for that tiered ratio program, they will accept CPA letters. So that should be, you know, obviously a full overlook of the file, but that does sound like it works within the guidelines. We answered that one. Sorry, guys, I'm trying to skim as quick as we can. All right. Oh. Where can I get the full guidelines so I can feel comfortable explaining the addendum to the listing agent? Yeah, great question. So if you want to just reach out to your account executive, and if you're not sure who that account executive is, if you want to reach out to myself, I'm more than happy to get those over to you. And again, I'm not sure if it lists my email address, but you can use that EEP questions at travisafinancial.com. No. Okay. So the question is, do you require tax returns for borrowers that use 3 months bank statement program? No. If they're going to use the bank statement program, the 3 months bank statement program, we do not need tax returns. Oh, and I wanted to mention that, I'm not sure if I made it clear, but for the 3 months bank statement program, if you're using this program for ITIN, there's no expense factor. If you're using it for W-2, there's no expense factor, but the underwriters do like an LOX on why you're using it for W-2. Most of the people that I've had run it W-2 is because well, my most recent one was a waiter and received a lot of tips on the back end. And then I had another one that was a nanny that received a lot of bonuses in cash. And so those were the reasons behind a W-2 with the 3 month bank statement program. Yes, appraisal transfers are accepted. And as long as you show the paper flow the documentation of the flow of requesting the case transfer and it all coming through, then we do not need to have the name on the appraisal updated. And yes, you can submit a TBD with a soft pull.
I also wanted to add really quick, don't be afraid to submit something that might not fit the exact guidelines, because this program does allow for a lot of flexibility and they do make exceptions. So let's just say that maybe your FICO is a little lower or your DTI is slightly higher than, you know, the 50/60. They are willing to make exceptions as long as you have a compensating factor. So they have good credit or great FICOs, or maybe they have a little more reserves. So just because it doesn't necessarily meet the guidelines, don't be afraid to run it by Monique or whoever your rep is, because they are willing to make exceptions on this program.
Yes, and that's one thing that I also love about the entity is they want to help people get into homes. They understand that these are individuals that just do not fit in that traditional mortgage box, and so they've come out with their guidelines, but they don't want to say, okay, so now we're putting out more guidelines that you have to fit into. So Janelle's completely right. Exceptions, we request exceptions all the time. It's just we need to look at the full overview and go from there. So great points. Does anybody else have any questions? Oh, a W-2 with recent derogatory credit. So one thing that I can tell you with derogatory credit is going to need to be, if their credit score fits, the derogatory credit just needs to be looked at to see exactly what it is. Is it medical? How old is it? How much is it for? And so if you have a situation of that nature, also like Janelle was saying, the compensating factors. So, you know, they may have some derogatory credit, but they have some amazing compensating factors that we just would need to look at and get a complete overview of the situation. Can brokers offer this program in states they are not licensed? Unfortunately, no. You have to be licensed in the state that you want to close the loan in. So Edge Home Finance, the question was, are we approved lender with Edge Home Finance? So I will tell you that when I was over at the Tribe, we did do some closings with Edge Home Finance. In that situation, this is a great question because it opens up to the fact that most builders do not like to sign the assignment addendum. And so in that case, we can originate the purchase contract directly with the Tribe Tule River. So yeah, if you want to explain to Edge Home Finance the situation, the assignment addendum, we can get you a copy of it. And if they don't like it, then we can start the process off day one with it just going in Tule River's name rather than, you know, finding out later that they won't sign the assignment addendum. Recent lates on an installment. So what I would say on that is, what is the credit score? What was the reason? Is their verification of rent clean? Do they have any other alt trade lines that are clean for 12 months? What would you say on recent lates on installment?
So recent lates on installment, it really just depends if what the reason was for those lates. If it makes sense, then they're a little more flexible with it. So it just depends on the reasoning for those lates.
Yeah, agreed. I will say though that if they currently own a home and the mortgage history shows any lates within the last 12 months, that's very hard to overcome. We're so happy that you guys join us. And again, I have these webinars every Monday. We have our scenario Mondays. Every Thursday, we have our Deal Desk Thursdays. And for those webinars, I do a much quicker slideshow, just briefly explaining the product again for anybody that is new. But then I open it up for a lot more questions, Q&As, with scenarios, and gives you more time. So I'm really glad that you guys joined us today, and I look forward to working with each and every one of you. Thank you again, Janelle.
You're welcome. Thank you.
Bye, everybody. Have a great day.